Welcome to this week's Money Metals podcast, helping gold and silver investors during these treacherous times. Now, here's this week's market wrap with commentary and analysis from the company voted 2015's Precious Metals Dealer of the Year in the U.S., Money Metals Exchange.
Welcome to this week's Market Wrap podcast. I'm Mike Leeson. Coming up, we'll hear from Keith Neumeyer, CEO of First Majestic Silver Corp. Keith updates us on the state of the mining industry, how ridiculous and ultimately damaging the futures market has become, and why he believes the possibility of triple-digit silver is not ridiculous. Don't miss a fantastic interview with Keith Neumeyer, perhaps the most outspoken leader in the entire precious metals mining industry. But first, this week's market update. Precious metals markets are rallying strongly and showing signs of breaking out on the charts. Gold prices closed above the 200-day moving average on Wednesday, and on Thursday, gold finished up at its highest level since last October. As of this Friday morning recording, the metals are retreating a little bit. Gold prices are up 2.8% on the week to trade at $1,150 an ounce. Silver prices, meanwhile, come in at $14.77 an ounce on the heels of a 3.4% advance this week. The rally caused silver prices to break out of a 3-month trading range to the upside. Also participating in the precious metals rally, platinum and palladium. The platinum market got off to a poor start in January, but this week's 3.4% advance puts platinum back into positive territory for the year at $904 an ounce. Palladium remains in negative territory for the year, but prices have been moving up this week. Palladium is up by 2% to trade at $512. Metals got a boost this week from a falling U.S. dollar. The dollar index plunged more than 3% as doubts grew about the Federal Reserve's willingness to raise rates at all this year. New York Fed President William Dudley noted that deteriorating financial conditions would weigh on the Fed's next rate decision in March. More and more players see the Fed's recent move as a, quote, policy error, and a consensus is forming that the central bank will stand pat next month rather than hike rates. In fact, futures markets suggest the chance of any rate hike this year are now less than 50%. It's conceivable that the Fed's next move could be to follow the likes of Europe and Japan down the path of negative interest rates. With an election approaching, the Fed will be under pressure from Democrats to stimulate the economy. And negative rates may be all that Janet Yellen's crew know to do if the stock market is crashing and economic indicators are turning down. Earlier this week, Fed critic Rand Paul abruptly announced that he was dropping out of the presidential race after a fifth-place showing in the Iowa caucuses. Many sound money advocates are left disappointed that Senator Paul's campaign floundered. Rand Paul was a leading voice in the GOP field for auditing the Federal Reserve and reforming the monetary system. However, Rand was never able to match the level of excitement and popular support that Ron Paul's run for the Republican nomination generated in both 2008 and 2012. 4 years ago, it was Ron Paul versus the establishment. This time around, it was Rand Paul, along with Ben Carson, Ted Cruz, and Donald Trump, vying for the anti-establishment vote. Both Cruz and Trump remain viable contenders, with Trump a loser in Iowa, but still the frontrunner in national polling. Ted Cruz was called out by Rand Paul in the last debate for missing the audit the Fed vote, but of the remaining candidates, Cruz seems to be the most supportive overall of sound money principles. He has said he favors restoring gold backing to the dollar. Donald Trump, meanwhile, hasn't said much about how he'd reform the monetary system. He's complained about the Fed's money printing and its enabling of huge debts Congress is running up. But Trump hasn't yet proposed specific sound money policies. History shows that a gold-backed sound dollar promotes a sound economy and sound fiscal policies because the government is forced to live more within its means. Former presidential candidate and sound money advocate Steve Forbes made that point in my interview with him last week. It's the habit of politicians to promise voters more than they can deliver and never to admit of the need to cut programs. Since the U.S. abandoned the gold standard entirely in 1971, Congress has never been forced to cut spending. Even when faced with trillion-dollar deficits, Congress keeps spending because it can. Because members of Congress know that the Federal Reserve will back them up by artificially lowering the government's borrowing costs and buying up government bonds if necessary. As long as the Fed has the ability to drive down interest rates, expand the money supply, and buy up government debt at will, there's little reason to believe that the next Congress, or the one after that, will want to cut the bloated federal budgets and sprawling bureaucracies. That's not to say that elections don't matter, they do, but voters should be very skeptical of any candidate who touts small government or fiscal responsibility or balanced budget proposals unless that candidate also has a plan to implement sound money reforms. Well, now, without further delay, let's get right to this week's exclusive interview. It is my privilege now to be joined by Keith Neumeyer, founder and CEO of First Majestic Silver Corp, one of the top silver mining companies in the world. Keith has an extensive background in the resource and finance sectors and has been an outspoken voice about concerns that there is some level of price suppression going on in the silver futures market, and it's a real privilege to have him on with us today. Keith, thank you so much for joining us, and welcome.
Well, thanks, Mike. I appreciate your time.
Well, there's so much I want to ask you about, so I'll just get right into it now. As we're talking here on Thursday, we're seeing a continuation of a modest but positive price action in the metals. A rally seems to be a long time coming here, and I'm sure it's a welcome sight to folks like you. We'll see if it ends the week on an up note here and if the rally can continue. But I want to start out by asking you about the futures market, which you have been openly critical of. There is some concern that exchanges like the COMEX may be impeding discovery of the true market price for gold and silver. There have been many examples of games being played. You've got huge sell orders being dropped on the markets in the middle of the night or during other periods of low liquidity. And then you have banks actually admitting to rigging the London fix and sticking it to their own customers. The evidence piles up, but regulators are turning a blind eye. If prices for precious metals are being suppressed, it's producers like you who are harmed. It doesn't seem like it can go on forever. So how do you see this ending for the COMEX? Can it be reformed, Keith? What are your thoughts there?
Well, it is nice to finally see the metals moving over the last few weeks. Actually, we're now a month into the year, and it's been a pretty good start for miners, and hopefully it does continue through the next several months. But interestingly enough, as you probably know, we saw two fixes in London. One last week on Tuesday, I believe it was, 85 cents below spot, and that's the first time that's ever happened. And I've talked to our traders who trade the metals, and it's completely unexplained. There was a couple of news articles that showed up, and of course the banks who are behind this fix are completely silent on the fact that this has happened. Then the next day, on Wednesday, the fix was 10 cents below, which is obviously a lot less of a big issue, but it's still below the spot. The fix is 10 cents below the spot. So 2 days in a row, we had the fix that was below spot prices, which has gone completely unexplained to all the suppliers. Now, fortunately, First Majestic doesn't have a lot of its product that is affected by the fix, because we produce most of our silver in the form of dory bars, and so our dory bars are based on spot on days that we decide to sell our metal. But we do produce some of our silver in the form of concentrates, and those concentrates are affected by the fix, which is unfortunate. But some mining companies who have 100% of their production, for example, based on the fix, are very dramatically affected. And it's not the COMEX, this is the London market, obviously, but it's all the same. These are the same players that trade in the COMEX, the same players that trade in London, trade on the LME, and trade in this market, and they fix these prices, and then it's completely contrary to general market forces. And my issue with the COMEX is clear. I've said quite honestly, create a system whereby they have to have a system in place where they can go 100 times what's in the vault, for example. We have a fractional banking system. We know it's there, but they can sell unlimited ounces in the form of paper, and there's no limit. All I'm saying is create a limit whereby the banks can sell 100 times what's in the vault. I prefer it much less. I prefer it 10 times, but that's probably unrealistic. But right now, when you can trade 1 billion ounces a day, and the miners are only producing 800 million ounces a year, that system, in my view, is broken.
Yeah, more ounces traded on paper in a single day than are produced globally in an entire year. It's truly mind-boggling.
Yeah, that ratio is nuts.
Yeah, it seems totally unsustainable. I would think something will have to give at some point. You purposefully held back some of your production because you would rather hold some of the silver on your balance sheet rather than trade it for cash, and you've called on others in your industry to do the same, basically saying let's not let the market have our silver until something changes with the price setting mechanism for our product. Are you getting any traction on this, Keith? I know that many miners may not have the financial strength or available cash at this point to hold back some of their production, but do you see others following your lead on that?
Well, of course, all the miners are in stress right now, but I'm not asking for a big deal. For 1 month of production for us, First Majestic, we're a small player in the whole scheme of things. We produce 18, 19 million ounces of silver, which is a big number, but of 800 million ounces that's produced in a year, that's a small number. And I was actually in New York just a few weeks ago, and I was surrounded by a number of executives at a dinner, and I quite clearly stated in the room, and there's about 30 people around the table, 20 or 30 people around the table, and I said, look, let's pick a month. Let's hold back our production in June of 2016, and I can tell you, everyone in the room could afford to do it. We could afford to do it. We would still be producing. Everyone would still be working. We just simply wouldn't sell our silver. Now, again, this goes back to the concentrate sellers. It's more difficult for the concentrate sellers to do it because they have contracts in place and they have to deliver their metal into these contracts. The ships pick up the metal or the concentrates and goes into the different smelters around the world. So it's a little bit more difficult for them. But if you're producing doré bars, it's a lot easier for those doré producers to do exactly what I've asked them to do. I didn't get a single taker in that dinner. I was very disappointed.
Yeah, that's definitely a shame to hear, but hopefully those other guys will start to recognize that it's going to be important for them to do something versus sit idly by. I mean, at some point you would think that it would make economic sense for them to have maybe some short-term pain on the cash flow just for the long-term good. Do you still have some hope there?
Well, I think it would send a message. Unfortunately, a lot of mining companies don't understand what they're selling. They take the rock out of the ground and then they produce the metal, and they're happy with it, and they don't understand the monetary nature of the product they sell. And I think the mining companies should get together and put their foot in the sand and say, look, enough is enough, and we're not going to deliver metal to the banks for 30 days. Personally, I think it would be a cosmetic stance by the mining companies, but it would tell the banks, it would tell the world that, we're fed up. I think it's important.
The recent price increase this week notwithstanding, some good news for the mining industry, I would think, has been the falling price of oil. How has that affected or benefited your business, Keith, and how much has it helped reduce your all-in cost of production?
Well, in Mexico it's a little bit different. I think outside of Mexico it's probably helped the miners a lot more. The price in Mexico is set by the government, so the producers in Mexico, well, not just the miners, but industry, period, in Mexico has not had a benefit yet, nor has the consumer. A regular fellow on the street who goes and buys gasoline still today is paying, actually they're paying more for gasoline today than they did a year ago, so they have not had any benefit at all, nor have we had any benefit at all. But, the chemical costs have gone down. And there are other inputs because oil, of course, is responsible for other things, transportation and then chemical production and so on. But the actual price of diesel is actually higher today. That changes, mind you, in January of 2017 when the price of energy and price of oil and gas in Mexico does float to world standards. So we are looking very much forward to that day, January 1st, 2017, but we haven't seen the big impact yet.
What's the current state of the mining industry? Obviously, it's been a tough slog given the bear market we've been in for the last 4+ years now. I guess First Majestic, you guys have been maybe able to adapt probably better than most, but how's the industry doing, Keith?
Your listeners need to be told. I think all they have to do is look at their portfolio, but it's been tough. And I've been in this business for 34 years. I've seen lots of ups and downs, and this particular down cycle, we're 5 years into it, and a lot of the juniors are hurting. We've seen mines close around the world. We've seen thousands and thousands of layoffs. In our case, we've laid off 1,500 workers. We had 5,500 employees at the top of our business, and today we have 4,000 employees, and we're actually producing more silver today than we did when we had 5,500. So I guess we're more efficient as a business. So I guess this downturn has allowed us to improve our business quite dramatically. We've brought in automation, a lot of innovation projects. We've done a lot to our business to improve what we do, how we produce metal, how we produce silver, obviously. And it's been good. So we've taken advantage of this current environment, and I think we've improved the business dramatically. And we're now profitable at these metal prices, which we actually were producing metal at a much higher price a couple of years ago. So I think it's been exciting from our standpoint, but it's been tough for some of the miners because for us, First Majestic's quite a flexible company. We're not bound by contracts or contractors, and we fortunately own all our own equipment, and we have all our own talent base and talent pool, so we haven't had to outsource and so on. And then a lot of the other companies who didn't, in the heyday of the bull market, go and buy all their own equipment and buy their own talent. They're stuck, with their cost systems or cost structures in place because they just can't afford to make the changes to their business today that they would like to because the capital markets are closed. So these smaller companies that have different businesses than ours are really struggling, and it'll be interesting to see what happens here because if the metals do keep going, and we saw this in 2015, we saw this in 2014, where the first few months of the year are quite positive, and this does feel a little bit different, mind you. This start of 2016 does feel like this might be the beginning of another news cycle that could last several more years. But time will tell. We can't. I'm not going to be calling this the next bull market yet, but it does feel pretty good. So maybe the metal price will save some of these juniors. Maybe not. I just don't know. Too early to tell.
Obviously, supply is getting constricted based on what's been happening, and now the U.S. is actually a net importer of silver, which is a recent phenomenon. We used to be a net exporter of silver here in the States. Meanwhile, you have countries like China, in particular India, going on a silver buying spree. Are you seeing evidence of supply of fine silver getting tight in the global market? Because if you look only at the current published price of silver, it doesn't seem so.
Well, it's interesting you say the U.S. is now an importer, and I do know that. I've actually stated it a couple of times, and I'm glad you know that because it's not a well-known phenomenon that's occurred, and that's a recent event because production is dropping worldwide. I don't know what the 2015 numbers are yet. I know Mexico's down 6% year over year. I've heard other countries are down as well. Some of the back of the envelope numbers that I've seen out there is the world production of silver has dropped somewhere around 10% annually. I'm waiting for confirmation of that number, but we know the consumption is increasing, and we know solar panel consumption is increasing. Other technologies, I don't think cell phones and laptops and iPads and automobiles and and so on are decreasing to any great degree. So I think they're increasing. So the use of the metal is still climbing, and we're in a deficit. So we're consuming somewhere around 1.1 billion ounces of silver annually, and the miners are producing, at least in 2014, they produced about 800 million ounces. We'll see what it was in 2015, but all evidence shows that number's lower. So this deficit that we're having is increasing, and the silver is a much more rare metal than people actually realize. And as a human race, we're consuming more silver today than we ever have. And above ground supplies are dropping substantially. And I think we're going to have a huge supply squeeze in silver, but it's not showing up in price yet. But it will over time. I'm confident of that.
That leads me right into my next question here. Our mutual friend David Morgan goes through all the amazing uses and applications of silver in his new book, The Silver Manifesto. You just alluded to some of those. There are just so many, and the list grows all the time. Do you envision industrial users of silver at some point starting to maybe hoard the metal as news of dwindling supply starts to spread? I mean, this is something we saw with another one of the precious metals, palladium, about 15 years ago, and it drove the price up, like fivefold in a very short period of time as automotive manufacturers snapped up all the palladium they could get over fears of not being able to get it for those catalytic converters, potentially shutting down their automobile production line. Could we see this kind of industrial hoarding panic occur in silver, Keith?
Well, I actually think there's a complacency. I think that the Sony's, Toyotas, Intels, you name it, Teslas of the world, who are big consumers of silver, just think that there's just an abundance of the metal, and I don't think they really have their eye on the ball at all. And I think there is some smart money out there that knows what's happening. You see the silver eagles, the 6 million ounces of silver eagles sold in January, and then the buyers aren't retail. These buyers are commercial, sophisticated, buyers, and then, David Morgan alluded to, who that might be. No one really knows, and I think Ted Butler has also alluded, who these buyers of this silver is. There are people in the know, but it's not industry by any stretch of the imagination. I think that, these big consumers of the metal don't have a clue about the product that they need and their products that they produce on a daily basis, because if they did, they would be the buyers, of this metal, and it wouldn't be the banks or the sophisticated, people who are buying this metal. So it'll be very interesting to see over the next year or so when the metal does get so tight that the big producers of electronics and other products, just simply can't get the metal, and then they're going to panic, and then they're just going to go, I think, pay whatever they can pay just to get it, because don't forget, there are very small amounts of this metal in these components. So, if you're, a producer of iPhones or a producer of BlackBerries, you don't really care what this silver costs, because if it's $100 an ounce, it's not going to change the value of your iPad very much. It's just going to be a couple of dollars, which will be used and absorbed into the cost of the product. So they'll just pay whatever they can pay for it, and be the sophisticated investor who ends up making the big money, I think.
Yeah, that's certainly when things could potentially go parabolic. Shortages, beget more shortages, as they say. That would be an interesting phenomenon if it does start to happen. Now, you've made a career out of profiting on buying value, buying near the bottom in the resource sector. What do you have to say to the guy who may be sitting on the sidelines right now, may have liquidated some things and might be sitting in cash, but considering putting some of that money into silver? Is this a good time to be making a move into the metals, or is it still maybe too early?
Well, for me, I like to buy mining stocks because, that's where your leverage is. And, I do own some physical silver and also physical gold. But most of my, portfolio is in actually mining stocks. But it's tough to find good ones. And most people lose a fortune buying bad stocks and bad companies. It's just not in mining. It's in industries across the planet, obviously. And it's always hard to pick good companies in any sector. And it all comes down to risk tolerance. I personally believe this is the time to be buying these metals. But a good mining stock will go up 2 to 3 times faster than the metal itself. And if you go back And look at what happened to First Majestic Silver, when silver went from, basically $10 to $50, the stock got up to $26 a share, and the performance did outweigh the actual metal performance. So, and that's very common, but it is difficult to find good companies. I caution your listeners to always look at management, always look at what they've performed in the past, or how they've done in the past, how have their shareholders done in the past by investing in their companies, and try to buy at the bottom of the cycle, because what I've done in First Majestic and also in my new company First Mining Finance is I buy assets at the bottom of the market, and in 2015 I bought 5 companies, and in the case of First Majestic Silver, we bought one company called Silvercrest, adding our 6th producing mine to our portfolio, another 5 million ounce producer, which is now our biggest mine. And I think we picked it up for basically, I know we picked it up cheap. And then in First Mining Finance, we bought 4 companies and, built up a portfolio of 8 million ounces of gold there, and paying ridiculous prices for those ounces as well. So, this is the time to be buying assets. But, at the same time, investors need to realize that, mining is a risky business. It's volatile. It's hard to pick a bottom in any industry. So just pick good companies, or if you're less tolerant, just go and buy the metal and just be patient.
Well, as we begin to wrap up here, I know obviously you're pretty bullish on poor man's gold, as they call it. So as we begin to close, tell us why you're so optimistic about the future of silver.
Well, I think it's pretty easy, actually, because, silver is way more rare than we think it is. And there's an old number that was produced by Sir Isaac Newton when King Edward was creating this pound sterling. And they came up with, this is in the 1500s, and they came up with the number 16 to 1, gold to silver. Yes. So the question was, well, how many ounces, silver are there in the Earth's crust compared to gold? And, Sir Isaac Newton came up and said, well, 16 to 1. So, okay, so that was kind of the number that, has been floating around the planet ever since. And it's been gospel. But interestingly enough, we're only mining 10 to 1. So for every 10 ounces of silver, 1 ounce of gold is mined. So silver is way rarer than even we thought it was 500 years ago. And consumption is increasing every single year. And the above-ground supplies of the metal, and you can go back and look at what was above ground in the 80s, and there was about 5 billion ounces of 1,000-ounce commercial bars. That's now into billion ounces of silver accounted. So we've consumed 4 billion ounces of silver in the last 30 years, and it's gone. It's not coming back. It's not been recycled. It's in waste dumps. It's in the ocean. It's in stuff that'll never be seen again. So, at that rate, and as the consumption is increasing, and even if production stays flat, which it doesn't look like it is, but even if it stays flat, that deficit between mine supply of about 800 million ounces and the world consumption of about 1.1 billion ounces is eating away at all this above-ground supply. So, we're trading right now at 80 to 1 gold silver, and we're mining at 10 to 1, and we're in a deficit. So how can that relationship last? We're going to have a racial compression, in my view, that's going to send the price, and I've said this 100 times, to triple digits. And I know that $14 or $15 silver sounds stupid, and it's probably hilarious to many people. But that's where I think it's going, and that's why I put together a silver company 13 years ago, and that's what I'm looking forward to. And we'll see what happens. We'll see if I'm right or wrong, but that's what I think is going to end up happening.
Certainly would be nice to see true price discovery take place in the silver market. Some event may trigger that, and when that does happen, those fundamentals, the fundamental case that you just laid out there, you think is going to finally start to take hold, and silver is likely to shoot significantly higher when that finally does happen. It should move pretty quickly when it does. Well, Keith, I want to thank you for sharing your insights and your firsthand accounts of what's going on in the silver mining industry. We really appreciate your time and your boldness when it comes to exposing what's happening in these distorted markets. We wish you all the best. And before we go, please tell our listeners about how they can get more information on both First Majestic and also your new venture there that you spoke about, First Mining Finance.
Yeah, for sure. And I'll keep pushing my efforts, and I'm also on Twitter. The Twitter @Keith_Neumeyer is KEITH_NEUMEYER, my last name. And of course, the company's CEO of First Majestic Silver. Simple, just www.firstmajestic.com. And of course, my new company, which went public in April of 2015. It's www.firstminingfinance.com.
Well, thanks so much, Keith. I know you're traveling there in Europe, and you took time out of your busy schedule to visit with us, and we really appreciate it. And I hope you have a great weekend, safe travels, and perhaps we can catch up with you again down the road as this starts to unfold.
Thanks very much, Mike. Appreciate it.
Well, that will do it for this week. Thanks again to Keith Neumeyer, founder and CEO of First Majestic Silver Corp, ticker symbol AG on the New York Stock Exchange, and one of the largest and most successful primary silver miners in the world. Don't forget to check back here next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Leeson with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.